Hey guys, welcome back to the channel, and yes, from the title, my 8-year-old daughter will be teaching you guys some trader vocabulary words. So she's going to break it down in her own words in a way that anyone can understand. Kids, adults, beginners, it's coming from a kid, you should be able to get it. And then after that, I'm going to come on and connect it to the live chart so you can see how each concept lines up on the actual charts. So stick around. Lindsey's going to start with her trader vocabulary adventure, and then after that I'll come back on and piece it all together. And actually using these concepts, we got some really good risk to reward trades this week, as you can see. And then here we are today. Very nice trades using these same concepts that I'm about to show you guys. All right, so let's get to it.
Lindsey's trader vocabulary adventure. Learn the markets and find easy words. Chart. This is the market picture book. Shows how price moves over time like a story with ups and downs. Candle. Prices diary entry. Green means price went up. Red means price went down. Support. The market's trampoline where price often bounce up like the floor holding it. Resistance. The market's ceiling where price often bumps down like the ceiling stopping it. Stop loss. Your safety seatbelt closes your trade so you don't lose too much. Take profit. Your candy jar closes your trade when you made enough. My favorite. Liquidity. The market snack stash where price grabs stop loss before running in the real direction. Breakout. This is when price jumps over a wall. Retest. Prices double check. Price comes back to check in before continuing. Trend. Prices hiking trail. Direction price is mostly moving uptrend or downtrend. Fair value gap. This is price's skipped step when price moves too fast and leaves a space on the chart that is often comes back to fill later. Correction. Price's nap time. It takes a little rest and moves the other way before getting back on track. Gaps. This is the market's magic jump. When price closes at one number and opens at a totally different number, leaving an empty space between. Key level. This is the market's favorite hangout spot. a price area. It's likes to visit over and over again. Higher high. This is price's record breaker. Higher high means it climbed higher than before. Consolidation, prices chill zone when it moves sideways in a tight space, deciding where to go next. Pullback. This is the price's backyard. Backward. Pullback. This is price's pullback step on.
Start over. Backward.
Step back.
All right, go ahead.
Pullback. Prices backwards.
All right.
I can't.
All right, hold on, get it together.
Okay. Pullback. I can't. Pullback. Prices backward step on the stairs. It's just.
It's okay.
Pullback. Prices backward step on the stairs. It's the. I can't. Oogie. This is the price's backward step on the stairs. It steps back a little before continuing in the same direction. Guys, are y'all ready for a quiz? Lindsey's training quiz. Let's see how much you have learned. Which one is the market snack stash? Put it in the comments down below. What helps close your trade when you have made enough money? Not gonna tell you guys. Put it in the comments. Where does price bounce like a trampoline? Where does price grabs? Wait, I forgot. Where does price grab stop losses for running in the real direction? When price steps back a little before continuing in the same direction, what's it called? Congrats, Trader Pro.
Okay, guys, I hope you guys enjoyed Lindsey's Trader Vocabulary Adventure. As usual, she did a great job, so I just want to come on and touch on each concept that she mentioned on the actual chart. So the first vocabulary word that she actually gave you guys was chart. So here, we're on tradingview.com, and this is what you're looking at is the chart. So this is what we call the market's picture book. It shows how price moves over time. So then our next word was candle. So here we have our candlesticks, green, pink, typically green or red, but I don't use red for psychology reasons. So again, this is like a diary entry. So with our candlesticks, Here we're on the 1 minute, so each minute we're getting a new candle. And then we have our green that goes up and our pink that goes down. The next word we have for you guys was support. And we call this the market's trampoline because typically when price comes to this area, it bounces back up. So an example here, this is considered a support area. Every time price came to this area, it went up. Come to this area, shot up. So that's our support. Then we have our resistance, which is like our ceiling. So this is where price comes and often bumps down. So an example could be like here. We have some resistance here. Every time the market comes here, it goes down. Came here, went down. So that's resistance. Then we have our stop loss. So here on TradingView, let's say we wanted to take a sell here. This red area is our stop. So with our stop loss, this saves our accounts, keeps us from blowing all our money. We know what we want to risk, and that's the amount we use for our stop loss. So let's say, because we said this was a resistance area, we don't want price to go back above it. So if it does, that means we're on the wrong side of our trade. So we put our stop loss here so that if price does come back, it takes us out instead of going and going and going, and we're getting more negative, negative, negative. So that's your stop loss, your safety seatbelt. Then we have our take profit, which is where we're targeting the market to go. So let's say we're in the same trade. We enter here, our stop loss is here. We don't want the trade to go above here or we lose. However, with our take profit, let's say we target this low here. So when the market comes down, 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 when it gets here and we have our take profit set, it takes us out of our trade in profit. So that's like the market's candy jar. This is my favorite, take profit. Next, we have liquidity. So liquidity is where you have relatively equal highs or lows, where the market goes and it targets those areas. So here you see we have our support. Traders that are taking buys, wanting the market to go up, they're putting their stop losses here. So the market targets this area and is also considered liquidity. So basically, we have these relatively equal lows. When the market comes back, it takes it out. So that's considered our liquidity. But not only did it take it out, we had these buyers that wanted the market to go up. Then they got taken out. And then where did the market go? Back up. So it grabs their stop losses and then it runs in the real direction. So that's liquidity. Then we have our breakout. So for a breakout, we call it price jumping over a wall. Like if we have resistance here and the market went above there, that would be considered a breakout. Let's say here, this is your liquidity area, but the market also broke out of this area. Okay, So let's find us a good breakout. Typically, when you have consolidation, like here, remember consolidation is when the market's moving sideways. See how the market's consolidating in this area? Then it broke out of that area. So that's our breakout. Then we have retest. Typically, when the market breaks out, it does retest that area. It leaves it and it retests it like it's coming to check in before continuing where it wants to go. This isn't a major example of a retest. Let's see if I can find one that's a little better. Like here, the market broke out, then it came back to retest this area. Still retesting it. So that's retest. Next, we have our trend, which you guys should definitely know by now. So we either have price going on a downtrend or price is on an uptrend. So that's our trend. Then we have our fair value gap. And so this is when price moves too fast and leaves a space. For example, here. We're going to mark here to here. And what I'm marking is the bottom of this wick and the top of this wick. With the fair value gap, you have 1, 2, 3 candles, and then you have that space in between. So the market often comes back to fill these gaps. It's like the market was going down and it just went down super fast and it left this fair value gap. Another example of a fair value gap here. One, two, 3 candles, and it left this space. And see how the market came back to fill it. Okay, correction. This I typically look at on the higher time frames. Okay, it's not letting me do it. Okay, so on the higher time frames, this is when we have the market trending. Okay, so for example, here we have the market in what type of trend? We're making higher highs and higher lows. Higher highs, higher lows, higher highs. So we're in an uptrend. So a correction is like the market's taking a little rest. So we're in an uptrend. So we have the market going up. Then it comes down a little bit to correct. That's your correction. Then it goes back up some more, comes down to correction. Goes up some more, comes down to correct. Your correction. Market goes up more, and another correction. So that's the concept of a correction. Then we have our gaps, which is when the market closes at one price and opens at a totally different price. And this typically happens when the market closes at 4:59 and opens back up at 6 o'clock. We'll typically have a gap. So let me find an example for you guys. Okay, we do have a gap here where the market closed on Thursday and where it opened Thursday at 6 o'clock. So we have a tiny gap here. They can be large. Okay, so that was a gap. Next we have key levels, which this is where the market likes to hang out. It could be your support, could be your resistance area, could be the gaps I showed you. Those could be key levels. We could have our daily highs and lows as our key levels. Please excuse this chart. But yeah, so our daily highs and lows, we can have our session highs and lows. All of those are considered key levels where the market likes to come back to and kind of hang out. So then we had our higher high, which was our uptrend, making higher highs. Then we had our consolidation, where the market's moving sideways, not really trending, it's just moving sideways. Moving sideways. Then you have our pullback, which is also kind of like your correction, where we have the market move up, then pull back, move up, pull back. So that's our pullback. So those are the vocabulary words that Lindsey touched on, and I just wanted to explain them on the chart. And also with the quiz, guys, I did realize that her face was kind of covering some of the answers, but